Welcome to Buy, Hold, Sell. My name's Matthew Kidman, and today we're talking resources. And I have Jeremy Bendeich from Avoca and Steve Johnson from Forager. Welcome, gentlemen. Jeremy, I'll start with you. Big end of town, bulk commodity producer RIO Tinto. Buy, hold, or sell?
Oh look, it's still probably a sell. Capacity's got to come out of this industry. It's a low-cost producer. You want to be in the low-cost producer, but probably not at this point in time because there's still a lot of risk around the commodity price unless that supply comes out, and it doesn't seem like they're taking any supply out.
A sell. Are we there yet, Steve?
I would say hold. I think that this stock is going to be around in 20 years' time. I think it probably deserves a place in a portfolio as a little bit of exposure to this theme, simply because I think the psychology at the moment is so interesting. You know, no one wants to own it. I don't think BHP and RIO have fallen as much as you would have expected given the environment that we're in. So there's still a fairly balanced view of the stocks out there, but I think the quality of these assets deserve a place.
If you own it, hold it. Okay, good stuff. Okay, takeover target, Sirius Resources. Buy, hold, or sell?
Yeah, I don't know a lot about this one. Jeremy will have a much better idea than me. I do know that the merged entity is going to be reasonably interesting in terms of some new assets coming on stream that look pretty interesting. And the Tropicana gold mine over in WA is quite a low cost gold mine and a different asset class from most other commodities. So if I owned it, I'd probably be hanging on to this one through to the combined entity, assuming that deal goes through as well.
Jeremy?
What you're seeing in small cap resources is there's a scale game going on here. There's mergers and acquisitions going on in this space because they've got to go back to the days of no one wants to invest really in single mine assets. They want a diverse portfolio, and so businesses like SANDFIRE, businesses like Sirius undertake over opportunities. And it's just an interesting inflection point. You want to own a stock like Sirius because it's not in production. It's got a low cost for nickel, and when it comes online, it's been built cheaply in an environment of declining costs.
All right, let's move on to mining services. Downer, been a great turnaround story over the last few years. Tough conditions. Yeah. Buy, hold, or sell?
I think it's more of a hold than a sell. It's done your classic 101 of any company that's faced with a declining end market. It's gone out there and tried to do some acquisition and stripping costs out. But at the same time, its EBIT that it's earning from its mining services is still under a fair bit of pressure. Mm-hmm. So, you know,
hold to sell.
Yeah, hold to sell.
Steve, Downer?
I'm at the opposite end of the spectrum on this one. We don't own the stock, and we do own quite a bit in this mining services space. I would go the hold to buy end of the spectrum though. We're looking really hard for businesses here that have been tarred with this mining services brush, sold off really heavily, but there's a good business there that's not dependent on that part of the market. I think you've got some of that with Downer. Now, mining's very important to them, but you've got a rail business that's a high quality business and a bunch of other stuff in there that is reliable, ongoing, annuity type revenues.
Soft buy maybe.
And I think if you pull that out, you'd pay a pretty high multiple for the reliability of those earnings. They're still winning mining contract out there. They're winning a lot off some of the companies that I own, so I know what's going on. I think they're a pretty efficient, lean operation.
All right. Well, let's stay with rail. Bradken, been a terrible story in recent times.
Yeah, I can't get my head around this one. I've seen all the stuff in the paper. A lot of fund managers out there saying they've got this US business that's a great business, and we keep looking at it and trying to find what's great about it and can't sort it out. So I would avoid this because I just can't see what other people are seeing in it. It might be there. I can't see what it is.
A lot of debt, falling revenue line. Buy, hold, or sell, Jeremy?
It's been a great private equity trade, but no longer, you know, you've had the private equity guys having a sniff around at it 2 times. They keep walking away.
Go with the sell?
Go with the sell.
Okay, let's go to gold, Australia's biggest producer, Newcrest.
Well, I'm fundamentally an anti sort of gold guy. I don't see a lot of value in investing in gold. So based on the commodity alone, I'm not a big fan. But you know, look at the investment it's made over the last 10 years and the cash flow it's put in versus the cash flow that's come out. It's been terrible, and we've been through a gold boom. So what happened to it?
So
why is it going to come back?
So okay.
This is a horrible business. It really is a horrible business. Again, I think the psychology is
Don't tell me it's a buy then.
I think the market is interesting, but I would not touch this business for exactly the same reasons. Just go and have a look at the cash that's been poured into it over the years and what's come out in an environment where gold's been more than $1,000 an ounce. And I just don't have a strong view on which way the gold price is going to go. My experience over the past 20 years has been, if you like the commodity, buy the commodity, particularly in gold mining.
Okay, all right, leave Newcrest alone. Back to mining services, MACMAHON, been through the ringer and back.
I put this one on the list because it's one that we own, and I thought we might try and get something positive out of the sector. This has been absolutely through the ringer, but you're sitting there, a business now that's got $50 million of net cash on the balance sheet. It's got a market cap of $80 million, and one contract, that Tropicana gold mine that I talked about, that should throw off $30 or $40 million a year of free cash flow. We're very focused on making sure that that cash flow comes back to shareholders now, because I've seen plenty of companies throw off cash flow, management does something stupid with it and it disappears into the ether. But I think if we can get a management team that wants to do that, there's lots of value here.
Do you want to smoke this cigarette butt like Steve does?
I think there was a good trade in there from 4 cents to 8 cents on the recapitalisation, effectively from them getting money from their Mongolian assets. Now it's a lot tougher, because we're in this environment where it was good days for mining service operators, but every mining service contractor that I'm seeing, they keep getting really onerous conditions. And yeah, you'd like to see the cash come out, but it seems to me at the end of the contract, they just seem to find a reason these days to hold back the cash.
So sell?
No, it's a hold.
Hold.
It's got some growth opportunities, but it's just very risky.
All right, give me something that you think is a buy. From the
As I spoke before, SANDFIRE, existing copper mine, low cost, will get through the cycle, and has had some very good results in relation to its drill out program around its existing facilities, with the potential to upsize the reserve, and maybe this will lead to the stock being re-rated on the ability to generate further reserves.
So SANDFIRE. Steve, you got something that can leave the viewers happy?
The one I'll put out there is South 32, the BHP spin-off.
Yep.
I like spin-offs in general, and every time it happens, I look at the metrics around the spin-off and I say, well, it doesn't look that cheap. And then 2 years later, you look back at it and say, look how much cost they pulled out of it, and look how the revenue line performed. This is not a Cochlea or something that's a great business that's being spun out, but I think you've got some very low-cost assets here. I think you've got a good management team that's very focused on making sensible capital allocation decisions and returning some cash to shareholders, and I think this is going to be a good investment even in a very difficult commodities market.
There you go. There's a couple there despite the doom and gloom.